Look, I'm a complete rookie when it comes to cryptocurrencies.
Bitcoin's just a little bit overhyped.
But after the recent run up of Bitcoin and Ethereum, it's hard to ignore. So I'm going to do my research, I'm going to talk to a couple of friends, a couple of experts, and see whether or not I should include some cryptos in my portfolio. It would be kind of foolish at this point to not include just a little bit.
So on my journey to figuring out whether or not I should buy some Bitcoins, Ethereum, Dogecoin, whatever it looks like, I have written down a couple of things that I wanted to research, a couple of concerns that I had, and I've done a little bit of research. I'm going to share what I have found. So one of the first things that I wanted to ask myself is, where do I see Bitcoin being in 10 years time? What are the use cases? What's the long-term prospects of Bitcoin? Is it just a fad? Is it just people on Twitter blowing it up, people on Reddit blowing it up, and there's no substance? And it led me to this idea of decentralization, and that when everyone in the market works together, it is actually quite efficient. And it's only when governments and other controlling entities step in, that's when they cause the inefficiency. And this is all to do with the government controlling the dollars and how many dollars there are out there. So if you look at the global pandemic in 2020, you'll see that the government just started printing money out of nowhere. A whole bunch more cash in circulation, which maybe led some investors to believe that there's some inflation that may be happening in the future. So to hedge against inflation, traditional investors like to go with alternative investments such as gold, artwork, just holding land, cattle, I don't know, maybe even Pokemon cards like we're seeing go crazy at the moment. There's this idea of just getting away from traditional investments that are a little bit more decentralized, a little bit sort of, the market's not quite efficient yet. There's this idea that it will get more efficient, which leads to this question: is Bitcoin really a good store of value? Will it replace gold as the store of value of choice in the future? And so, like in the news, there's been a whole bunch of comparisons between the gold market cap and the Bitcoin market cap, and how long is it going to take to get there, and how's that going to work? And this brought me to Paul Tudor Jones, who is a big dog investor, his letter to shareholders from May 2020. And in that, he compares 4 stores of value, so financial assets, fiat cash, gold, and Bitcoin, against some criteria to see which is his favorite store of value. And he's quoted saying here that the question facing every investor is, what will the winner be in 10 years' time? And he goes on to say, if I am forced to forecast, my bet is it will be Bitcoin. And we're talking about Paul Tudor Jones, who is one of the world's wealthiest men. He runs a massive hedge fund in the United States. He also says later in his letter that he is letting his investors know that he will be holding some percentage of his portfolio in cryptocurrencies such as Bitcoin. One of the other things that we need to consider is how trustworthy is Bitcoin. It's only been around for less than 15 years, whereas gold has been the store of value of choice for 2,500 years. So there's obviously some friction with investors trying to trust Bitcoin. And this brings us back to decentralization. No one runs Bitcoin, the market runs Bitcoin. And that's the hypothesis that lots of people have, that the world needs to be more decentralized. So my thoughts on Bitcoin is that I need to get in the market a little bit. I think I'll be following a similar strategy to Paul Tudor Jones. I'll just be having a very small percentage of my portfolio in these cryptocurrencies, and I will rebalance my portfolio once it gets out of hand. So I'm going to be dollar cost averaging every single month to get into these positions initially. So I'm just going to jump back on the computer now. I know this guy Jason, he's a fellow Aussie. He runs a YouTube channel talking all about cryptos and finance and other stocks. So I'm going to be following one of his tutorials to sign up for my crypto account. Let's do it. So I just learned Jason recommends SwiftX to start your crypto portfolio in Australia, so I'm going to sign up now. So I've just deposited some money into my SwiftX account. I also used Jason's referral code, so I got $10 worth of Bitcoin for free. Stocks, baby. So I'm going to actually go ahead and buy my first bit of Bitcoin. Bit scary. We're in, I've bought a tiny percentage of Bitcoin, a tiny percentage of Ethereum, and a little bit of Dogecoin, so it's exciting. Don't have the expectation that I'm going to get rich tomorrow, but hodl for life. If you are in Australia and you want to use SwiftX, I've got a link in the description below that you can use, and I think you'll get $10 free Bitcoin like Jason got for me. So thanks, Jason. Just to wrap up this video, I just want to say this is just a small portion of my portfolio. I'm not going all in. I'm gonna hodl, and this is just a small calculated risk in case the technology, in case bigger institutions, bigger banks and all that start investing in these cryptos. So I just want to leave it there. As I said before, if you want to use SwiftX, there is a link in the description below. But thank you so much for watching.